Matthew Osborne, Europe Policy Director at Ripple, details what is going to take place in the near future in his article titled RLUSD XRP, The Big Picture. In addition to that, we are going to discuss Mark Carney because he has recently released an interesting comment. During the time that Ripple and XRP are taking their examinations, he is connected to the Bank of England. A few things pertaining to Citibank and XRP were posted by this individual. In real time, we are going to check the accuracy of that. After that, I will conclude with some fresh facts regarding exchange-traded funds, ETFs. Everyone, this is going to be a video about a jetpack. Let's get down to business. I hope you had a wonderful time over the weekend. It is scheduled to be released on Monday. Have a wonderful week ahead of you. And lastly, keep in mind that all of these financial institutions are now aware that regulation is at their doorstep. The Genius Act, which regulates stablecoins, and the Clarity Act, which is currently being considered by both the Senate and Congress and is expected to be passed by the end of the year, are both examples of acts that are currently being considered. Therefore, financial institutions need to have a plan, and if they haven't been working on this, they have the resources, the time, and the team to do all of this. Banks such as Citibank, Bank of America, and JP Morgan have been working on this for quite some time. However, smaller to medium-sized financial institutions and credit unions have probably not done anything at all. So what exactly do you do? What are some ways that you can jump frog or leapfrog all of these other banks that have much larger teams and pocketbooks than your own tiny bank? In order to access their infrastructure, you will need to talk to a business such as Ripple Circle. The banks are going to connect with one another in this manner. Of the legacy system, begin saving 60, 70, or 80%, reclaim the money that was spent on Nostro Vostro, and begin putting it to good use right away. Over the course of more than a decade, XLPL has been a blockchain that has enabled the tokenization and movement of value. It is a blockchain that is decentralized, secure, and cost-efficient, and it was created specifically for use cases in the financial industry. In addition, there are over 100 validators that ensure the network's safety. A number of entities, including institutions, exchanges, businesses, individuals, and developers, are responsible for operating these validators, and the IRS. The Securities and Exchange Commission is out at Imagine. Since the XLPL was established in 2012, there have already been 2.8 billion transactions that have taken place on the platform, of which the total value is greater than $1 trillion. These transactions have been shifted between counterparties, it has been tested and trusted, and it is of an institutional quality with reliability and stability that spans a decade, handling billions of transactions that were completed successfully. In addition to that, it incorporates the world's first decentralized exchange, which brings together all of the liquidity with a single protocol, thereby making transactions more efficient with regard to capital. In that case, allow me to provide you with an update regarding the RLUSD stablecoin. With the addition of the RLUSD stablecoin to our product stack, Ripple made significant progress in the previous year. Ripple launched a stablecoin in December of the previous year, and it was a natural move for the company to take in order to continue bridging the gap between traditional finance and cryptocurrency. The RLUSD stablecoin was issued. We are able to provide the most advantageous U.S. cryptocurrency-enabled payment options by combining XRP and RLUSD, since we have the years of experience, the regulatory footprint, a robust balance sheet, and a network that has nearly global payout. Given that there is something like this, why would you do it? That is subject to stringent regulations, and it bears the imprint of BNY Mellon, the financial institution, right? Indeed, they are the guardian. What would be the point of you going to use something that you are not familiar with? Does this violate any laws, or is it perfectly legal? The question that surrounds USDT is this one. Because of this, it receives a grade of D, although Ripple, XRP, and the RLUSC all received an A, right? Consequently, if you are a banker or a financial institution, you will either go talk to Circle or you will go talk to Ripple. That is the case. You have arguably two of the most significant options available to you here in the United States and possibly elsewhere. Do not believe in USDT. This is the reason why they collaborate with exchanges. Nonetheless, regardless of whether or not we get into that, not all stable coins are made equal. The United States of America was seen as having the highest level of confidence for the stablecoin. Just to provide some background information regarding the stablecoin market as a whole, over the course of the past year, the market capitalization of stablecoins has been rapidly expanding. According to the present trends in the market, we are looking at a market that is currently worth $230 billion and it has been anticipated that this market might potentially expand to $2.8 trillion by the year 2028. Why is the market for stablecoins expanding at such a rapid rate? Which sources are responsible for the demand? To what extent do we believe that the primary demand drivers for RLUSD are? In the first place, Ripple's own payment solution is available to both new and existing customers for the purpose of making international payments between firms. Take advantage of the advantages that a stablecoin on the XRPL platform offers. Real-time settlement, network effects, and cheap transaction costs are all included in this. In the present moment, the XRP crypto asset is being utilized in our payments network. This particular crypto asset is the native crypto asset for the XRPL ecosystem. It is planned that in the future, RLUSD will also be available, which will provide our clients with an alternative option to select from when making payments. They are able to use the RLUSD stablecoin as well, which provides them with additional stability in the event that they do not like to settle in an unbacked cryptocurrency asset. Provide both value and an efficient on-ramp, off-ramp to the fiat Chrysler. Both the efficiency of the network and the quality of the experience that customers have are improved as a result of the utilization of RLUSD and XRP as bridge assets for repayments. Remember that you can basically convert RLUSD into anything else on the XRP ledger, right? This is something you do really rapidly. Is it correct that if we construct a Japanese RL yen, you have any other currency that we could use, whether it is the real yen, the real Great British Pound, or the real real, you are able to interoperate and serve as a bridge between the various currencies. There are some institutions and banks that are not going to be interested in using XRP because it is similar to XRP on steroids with stable currency. It is likely that some of them will be interested in using stable coins. Now, Ripple is equipped with each of these solutions. In order to do this, Ripple has been attending meetings with financial institutions and stating, hey, we need some types of stablecoin solutions. Ripple had previously collaborated with Tether and Circle, and they were saying things like, oh, we work with you know it. Ripple is saying that we need to get a handle on this situation. This is the reason and why they established the LUSD. The use of stablecoin as your first bridge asset into the digital asset markets will make it possible for you to enter or leave the cryptocurrency market without any. The money from institutions is on its way. Having said that, is this accurate? There has been no official declaration made by Citibank regarding the provision of cryptocurrency custody, particularly for XRP. As a result, I have no idea what to say, but it is not true. My opinion will be altered, and I will provide you with those facts once I get them. But as things stand right now, this is not factual. If it turns out to be true, I will amend my opinion. Now, let me introduce you to James Sayoff, who claims that the floodgates of exchange-traded funds, ETFs, are set to open within the next 6 months. After that, spot approval Coinbase listings in the ISG framework on September 11th, October might potentially light the fire. To list an exchange-traded fund ETF that holds its underlying asset, we don't need to get into too much detail, but it comes into play with things like surveillance sharing agreements and other ISG organizations that basically make it possible for all of these exchanges to share data with one another. When everything is said and done, however, the most important need is that you have a futures contract on an asset. This is the most important requirement. For a period of at least 6 months with one of those futures exchanges that satisfies the requirements of the CFTC SEC. And if you do that for a period of 6 months, they are going to effectively allow you to create an exchange-traded fund, ETF, which will immediately open the door for a whole bunch of different assets. The derivatives of Coinbase then, the ISG framework integrates that platform within its structure. This means that everything that is listed on Coinbase or that is associated with a futures contract for a period of 6 months potentially will be subject to going back and forth once this framework is accepted or if it is approved in its current form. It is a series of exchanges that are going back and forth with the SEC, just as you saw with the Bitcoin exchange-traded funds and Ethereum exchange-traded funds. Furthermore, this is exactly what they are doing with this framework. The earliest that it may be allowed, according to the theory, is somewhere, and I believe that it is somewhere around September 19th. It's not something I'd be willing to hold my breath for, but that's the direction things are going. On the other hand, we have a large number of exchange-traded funds, ETFs, that are due under the previous method beginning at the beginning of October. As a result, if these platforms release these assets for futures contracts, they are going to essentially function as if they are opening the floodgates. Was he referring to opening the floodgates? Shall we go?